orange pill the entire damn world. Because as Jeff says, the world will get so much better when we move to the sound money standards. So many, and the book ties it back. There are a lot of historical anecdotes that show why it's the unsound money that's created the problem, and the corruption. It just goes on and on. And by the way, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. China says they've got 2,000 tons. I think they've got 20,000 tons. Yeah. Right? It's very hard to figure out where the gold is.
According to Lawrence Lepard, the gradually then suddenly stage of a financial collapse is quickly approaching. It's getting harder to overlook the banking system's flaws as the U.S. government accrues unmanageable debt. The fact that Bitcoin has grown by 2,000% and gold has increased by 200% in treasury terms since 2020 is a glaring indication that investors are losing faith in the U.S. dollar and its debt-backed system. Meanwhile, a desperate attempt to cover up the impending crisis is evident in the government's increasing reliance on short-term debt. Lepard predicts that in order to support the system, the Fed will eventually have to print trillions more, which could hasten the demise of fiat money and usher in a new era in which tangible assets like gold and Bitcoin will be valued highly. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
I try to avoid politics of all stripes, okay? Because I don't want to offend anyone in Camp Red or Camp Blue. I tend to lean a little more towards red, particularly with respect to Bitcoin. But having said all of that, I think what's going on here is, and I'm very supportive of Doge. The government's got a lot of fat in it. I think what Elon and Vivek originally were trying to do, to a degree, it's a worthwhile thing. However, let's be practical about what can be done. If you look at the federal government, they spent $6.75 trillion in last fiscal year. 80% of that is Social Security, Medicare, interest, and defense. So 20%, 1.3 trillion is all they could go after, and they can't cut it all, obviously. And, the deficit run rate right now is about 2.4 trillion. So, unless you want to reform the entitlements or end all the wars and take defense and the defense footprint back a lot, or you want to get interest rates down lower, which they may have to do. They may have to go to yield curve control to bring interest rates down. I don't see how you balance the budget. So while I get the excitement over some of the things the administration is doing, and I'm supportive of some of it, I don't think, let me say this, I think the problem is too far. I think we're too far gone. I really do. And so we're in a system that's constructed so that you have to print money to keep the debt burden from collapsing. This is Lynn's "nothing stops this train" meme. And, we had a big print in 2008. We had a bigger print in 2020. There will be another big print. And so, in my opinion, as I said in the book, I feel like I want to stand on a soapbox and scream at the world. We're in a sovereign debt crisis, folks. You've got to protect yourselves from the oncoming inflation because there's going to be more of it. Last 100 years, 11 instances of countries that have gotten to 130% debt to GDP. In every single case, they had a currency event, either very high inflation, hyperinflation, or collapse.
Yeah.
And so we're at about 125% GDP. So it kind of feels imminent to me. Now, by imminent, I would say I think this whole thing gets resolved by 2030. So 6 years isn't imminent, but it's, I invest with a 1 to 5 year time frame. So it feels to me like it's coming soon. And this is what Luke has said, and I agree with him. I don't think there is a market for the long bonds. I think he realizes he's got to keep it short because he can't sell the long ones. There are no buyers. Look, in my opinion, we are in a sovereign debt crisis. We are at the cusp of the gradually turning into suddenly phase. And the two best data points to support that are that the U.S. Treasury bond used to be the base layer of the financial system for years. It was a safe place to put money. It wasn't going to get debased and you earned a yield, okay? Since 2020, in Treasury bond terms, gold is up 200%, Bitcoin is up 2,000%. That, to me, those are canaries sitting there keeling over in the coal mine that, we got a problem here. We got a serious problem. And so, but yes, I found it interesting that Besant got in there and he said, oh, all the gold is definitely there. He had to have been read in on that. There's no guarantee. He doesn't know if that gold is there, and neither do we. Ron Paul told me he's pretty sure it's not. I don't know what Ron Paul knows, but it hasn't been audited since '53. So and now Trump says he wants to go down there and check it out. I don't know. And by the way, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. China says they've got 2,000 tons. I think they've got 20,000 tons. Yeah. right? It's very hard to figure out where the gold is. We could have a strong dollar with a lower valuation. And so what it tells me is that they're going to work very hard to devalue the dollar in gold and Bitcoin terms, and to these tariffs, they're going to try and look after America first, and these countries that import into us, they're not going to have the right to do that without paying a higher tariff, and that's probably a good thing when you consider it for the blue collar worker and the American middle class. The negative is tariffs are inflationary. Any way you want to look at it, you reap what you sow, and this reaping and sowing is proof of work, right? You plant a seed, it grows into a crop, right? And we all know that you do. When somebody with the ability to click a mouse key can create money, that's reaping something, and they haven't sown anything. There's no proof of work. That's inherently unfair. It gives the person with a finger on that key enormous unfair power. And therein lies the whole damn enchilada. Yeah. I mean, that's the friggin' problem. And we got to end it.
According to Lawrence Lepard, Bitcoin has the potential to overtake all other monetary systems globally. He contends that because it is decentralized, the unfair benefits enjoyed by those in control of conventional fiat money are eliminated. A government or other central authority could not control the money supply in a Bitcoin-based economy for personal gain. According to Lepard, this would bring justice back and save common people from the unintended consequences of financial manipulation and inflation. He highlights that decentralization via Bitcoin is essential to leveling the playing field because the present financial system is biased in favor of the powerful and wealthy. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Orange pill the entire damn world. Because, as Jeff says, the world will get so much better when we move to the sound money standards. So many, and the book ties it back. There are a lot of historical anecdotes that show why it's the unsound money that's created the problem, and the corruption. It just goes on and on. People have been fooled. They watched a deflationary trend take place from 1980 to 2020. Deflation consistently. And by the way, the system should have deflation. That's Jeff's point, right? Technology makes things cheaper. And deflation, by the way, is good. Of course, Keynesians won't say that, but it is. But what they're going to have to do, and this is again Jeff's point, they're trying to run a financial system that needs inflation on top of a deflationary world. Doesn't work. It just doesn't work. And so I'm going to bet on the deflationary world winning and the financial system getting radically transformed so that we're going to, in 10 or 15 years, be on a full Bitcoin standard. I truly believe that the average American, and I truly believe that the founding documents of this country, the underlying premise is it's a game, and we know that some are more talented than others and they will thrive versus others. And that's the way life is. You can't, not everybody's equal. But what we all want is we want fair. and what we don't have now, we have is unfair. The people in power have rigged the game. And so, for those who argue for collectivism, I would say, you really don't want that, because who's going to run the collective? And, maybe this time it's a good team you like, but maybe the next team you don't like, right? How about we all get a vote in a distributed, decentralized system where the money is the same for everybody, nobody has an advantage, and it's fair, right? How about that? That is much more likely to give happiness and satisfaction and to get rid of all this political sniping that we got going on. That's my belief. I think they may have to. It comes down to how this unfolds and if something breaks. I think one pattern we have seen is that the Federal Reserve has two mandates, but really a third unspoken. The two Fed mandates, as in the 78 Act that they passed, are, manage towards full employment and price stability. And of course, they've come to define price stability as 2%, which is a lie. But for the sake of argument, that's what they're supposed to be doing. The third mandate that they've talked about a lot and acted on, but it's not written in the law, is what I call functioning financial markets. And so, and the math would suggest that you cannot grow GDP at 8% a year, grow debt at 8% a year and grow GDP at 4% a year without eventually that widened gap creating discomfort and a break in the financial markets. That's Hirshhorn's point of 130% debt to GDP. And so when that occurs, everything's off the table. There was a Powell pivot in 2019. Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet, and the bond market threw up on it and said, no way, and he had to pivot. Right? And then COVID came along, and there was a crisis there, and they pivoted again. And in 08, they pivoted. If we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically, or else the thing collapses. That all depends on how things unfold. I mean, if they unfold in the way I'm describing, where we have another crisis, you can be sure that they will take rates down. And Trump and Bissett, to their credit, I'm not sure how they're going to do it, but they have said they want lower interest rates. Now, okay, fine, and that may actually, and Groman even says, that may actually be called for. I mean, lower interest, but one thing is for sure, if they get lower interest rates, they're going to get more inflation. Because, today you're really not, I mean, that's the other thing. The book talks about how the inflation numbers are doctored, right? I mean, they're a joke, right? I mean, we all know inflation's not 3%. I mean, go to the supermarket, right? I mean, go look at your car insurance bill. Look at anything. It's not 3%. Look at your healthcare. So, eventually, and these are the three things I watch. I watch the price of gold. I watch the price of Bitcoin, and I watch the bond market. And so we'll know there's a problem if the 10-year goes over 5%. Because the last time the 10-year went over 5% in the fall of 2023, 12 Fed governors came out within 3 weeks and said, well, the rate hiking cycle's over.
Right.
They had to talk it down. They cannot live with high interest rates. And eventually, if enough people lose confidence in the bond market, what's going to happen, this is the debt, death, doom loop that I know you're going to talk about James with next, that they'll basically, the Fed will have to buy the bonds. And that's third world behavior. That's printing money to pay for your debt.
Right.
And you start down that path, and pretty soon the entire bond market is going to look at the Fed and say, sold to you. Right. I mean, and the entire, 36 trillion sold to the Fed, and the Fed's got a $7 trillion balance sheet. That's not going to work. Right.
Yeah. I mean, they've basically been doing that stealthily through the banking system.
Well, they've got the banks doing it, and they'll change the SLR so that the banks can do more of it. And the reverse repo game, Yellen played that like a fiddle. And I mean, Yellen and Biden left the new administration with just a big pile of shit. I mean, and I really applaud what the new administration is trying to do in terms of looking out for America first and not the bond market first and not Wall Street first. I mean, looking out for blue collar workers, because they're the people who've been screwed. But, how he's going to play these cards, it's tough.
Lawrence Lepard delivers a powerful message about fairness, decentralization, and the future of the U.S. financial system. He highlights that a manipulated financial system is undermining the U.S. essential ideals of freedom and fair competition. Lepard asserts that although there will always be victors and losers in life, everyone should be treated equally. Ordinary Americans are at a disadvantage, though, as the powerful have rigged the financial system to suit their needs. Lepard contends that decentralization provides an answer, especially with regard to Bitcoin. No elite group or government can control the money supply in a decentralized economy for their own political or personal benefit. He thinks that by doing this, justice would be restored, and the political manipulation that feeds inequity and division would be eradicated. He also highlights that the U.S. government is increasing its debt at unmanageable rates, warning of an impending debt crisis. The Federal Reserve will probably have no option but to print additional money if something goes wrong, whether it's growing interest rates or a decline in trust in U.S. assets. He claims that this conduct is reminiscent of collapsing economies and could throw the United States into a debt-driven abyss. Lepard's conclusion is clear. If the financial system keeps going in this direction, the Federal Reserve will have to purchase its own debt, which will erode confidence in the dollar and hasten the shift toward hard assets like Bitcoin and gold. He advises viewers to keep an eye on important indicators such as bond yields, Bitcoin prices, and gold prices, since they show when the system is stressed. Ultimately, Lepard believes that a Bitcoin-based system where money is fair, transparent, and outside government control is the best path to restoring trust and creating a more equitable financial future. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.